analyst with TradeCaptain.com. We should be live, hopefully. We just had a bit of an interruption, but yeah, should be live now. Guys, I hope you're having a wonderful morning, and let's take a look at the markets. But before we do that, as always, I need to stress that trading financial markets, unfortunately, is high risk, and we could potentially lose all of our invested money. As well, I'm going to share with you guys my outlook on the markets, but it doesn't necessarily constitute buy or sell recommendations. Okay, so what's going on? Well, it's a lot about cryptos today. Just take a look at the top headlines. Bitcoin slammed lower. Ethereum traced down to close to 10%. Bearish pattern triggered. I think we already a few days ago we looked at Ripple as well, how that could potentially move to the downside. Now this is another event coming up if you're trading Forex. This evening at 10 p.m. London time, we'll have the latest decision by the New Zealand Central Bank, and it could easily create some sort of a breakout from the New Zealand dollar versus the USD range. So we're going to talk a bit about that as well. Now, if you're new to this presentation, it's something we host here at the live trading room here at TradeCaptain.com, and TradeCaptain.com is just a website primarily focused on Forex, but we also cover stock markets like the Dow Jones Industrial Average and commodities such as gold and crude oil and silver. All right, let's begin, and we'll begin with the euro. And there's not much happening here in this market, and it could be quiet for longer. The next Federal Reserve rate meeting is in September, but I hope we're going to have some action before that. I did share some insights yesterday, like seasonality insights, and you'll find that article was published yesterday. And these are the seasonalities for the euro. So August tends to be the quietest month for the euro dollar, and it has been so for the last 5 years. This is average price change for August, which tends to be negative 0.01, so less than a tenth of a hundredth of 1%. That's how much this market moves. So if we literally start where we end where we started the month, which is literally bang on in the middle here around, I think it's 116.68 or 88 or something like that. If we start where we begun August, then that would not surprise me. Now the markets don't let themselves be confined to it's not that easy to sort of make a decision on the markets just based on this, but it does highlight that expect more sideways price action in the euro, and don't expect a breakout, but put some alarms on, some alerts. Most brokers they allow you to set an alert. You get an email, you get a text message, or you just put an entry order, and then just wait for that breakout. So on the break to the June low, we'll probably head to the downside. On the break to the upside at the July 23rd high, we head higher. Remember, the market traded sideways here for quite some time, and what happened afterwards? Well, the market declined nicely as discussed, and we had a very nice go. And if you can just get on board on one of these, maybe once a quarter, that's all you need really. As we're talking about the New Zealand dollar, here's the New Zealand dollar, and this is a daily range. And I have been bearish since we traded below 67, I'll say the 68 level. So when we traded to the downside here, I was really bearish. And actually, we might remember we were talking about here already, and we talked about the break here, yes, 68. But after that, not much happened. Donald Trump is trying to talk down the dollar. People are not really that interested to trade just right now, and we settled into this range. But that big pattern I discussed with you guys a few months ago, when I said that the price is trapped within this big range, I still think that that's relevant. I know we pushed back into the range, but we're still lingering around the border here, and if we trade below 66.89, then I think we can get something like the range, which means that we're gonna head much lower. And if we are trading here at 66.35, then in the next 6 months or so, then that would not surprise me at all. So what sort of levels should we be looking at? Well, it's very similar like the euro. The market is taking a breather. There's not much happening here. And the central bank rate meeting is due today. So potentially on our break to 66.89, we'll have the resumption of that downtrend. And you might see the New Zealand dollar trade at least down to say 64. And then we'll see if it wants to go all the way down to its targets. Again, we only need to have maybe like once of those big moves every quarter, or many times less, and that's really what we need, or what I think at least that we need. Now let's talk a bit about cryptos. So here's Bitcoin, and trading is a lot of trial and error. A lot of trial and error, and it's about knowing when to enter, but also when to exit. That is as equally as important. You might remember I turned bullish on the break to the upside. We rallied higher, and then we said look to get involved here, and then we got stopped out. Usually, you know, you put your stop loss at the right level if the price breaks your stop levels and does not come back. If you are always being stopped out and then price moves in your direction, then I'm sorry, you're doing it wrong. That if you're very good at putting stop loss levels, then price will break and the price will not look back most of the time. Here, exactly that happened. The market moved to the downside and is now challenging this low again. What we're looking for here is to sell, ideally on a corrective move, maybe up to this section up here. I think though that is going to be difficult for the market to actually correct all the way up to that level. If we use something like a 4-hour chart, I think we'll be better off. And you can see how I have a double top and then you have a slightly higher high up here. And my preference for this would be maybe a corrective move up to the lower end here, this section here. So this exact level is the, let me see here, 67.49. Actually, we can lower this a little bit to this low here. So here you're looking at a potential risk of $550, and if we head to the low, maybe potentially 663. So that is something that I would focus on if you're interested to scalp and trade the market in the short term. Other markets we discussed in the past in this presentation is Ripple. Look at Ripple. Wow. Total meltdown. Technical analysis works very well at this market. It's an immature market. All the cryptos, nobody knows how much anything of this should be worth. The only thing is that they know the blockchain is good, which means that it's all about market psychology. What do people think? You know, what are the levels people are watching? And this is something I shared with you guys. And a break to the downside here, I said, would take you down to 28, 23. We're down with about 19% since that break, and we still have a bit more to go, but we literally covered more than half of the target. And usually when the market takes out one level, it will seek out the next level, guys. It will do that, and if you're not careful, you will get crushed and lose money. Here it's too late to get involved now. If you're already short, you know, you just probably have a bit of a corrective move and then probably lower again. But yeah, it's looking really good, and it's all about just being clever enough and book profits. I traded this section here, from here up to 2, more or less. Average entry was 1, average exit was about 2. That's a 100% move. After that, I did try to get involved. I did trade a bit in April, not necessarily Ripple, but a bunch of other coins, and I made a nice little gain on the back of that. So I'm up with about 30% this year. Last year, so I'm up with about 127% on cryptos alone, on the whole portfolio. A lot of these people who got involved here, they literally just, if they didn't sell, which I guess most people did, but if the people that didn't sell, they just total agony right now. And this is Ethereum, second biggest coin. The market, as you can see, pushed to the downside, and we're literally back at levels seen in August of last year. Take out that low and we can go to the downside. There's probably more data to this than, well, there's more data than this one. This is, but I think it's 270 or so on the break to 360. This is gold, and gold have been bearish here for quite some time, and I remain bearish. I said over the last few days that I think traders are going to sell here at 1250, and they did sell already on the 3rd of August. They sold yesterday, and now we're back at the same level. I have been reducing my stop loss, and this is my trend defining level. Remember, I've been bearish since the market traded below this level, and what we've been doing since then is we've been reducing the trend defining level. And eventually what's going to happen is that the price is going to bounce back, and we're going to be in a situation where the market is no longer bearish. But for now it is bearish. I think it could probably go a little bit lower to maybe the 1207, maybe take out this level and head lower. Preference is a break to the low. And here is West Texas crude oil prices. There's not much activity happening here, even though it should be a busy month. August tends to see price changes of 3.4%. Crude oil prices turn a bit quiet in October, so it should be busy, but it's not too busy right now. I guess bullish on a break to the upside, bullish on the move to the downside. Remember, the market moved very strongly to the upside, and I was not ready for that when that happened. However, we said this: if we trade below support here, we're probably going to move down here. So we had a 1, 2, 3. On the 4th day, we touched the levels, and that's what I'm all about nowadays. Just looking for that perfect opportunity to get involved, get some quick return, and then most of the time not bother with the market. This is a typical market which is range bound, which I personally think is no point getting involved with. And this is the DAX. So the DAX is moving to the upside over the last day or so. We said potentially look to get involved down here, but we have not seen too much action since then. The market did move up to the upside, and I'm going to maintain a bullish bias for now. They are, however, better markets to trade, and yesterday I shared an update on the Dow Jones. So do you remember this setup? This is from July 26. The Dow Jones was trading at that point at 25,455, and I said as long as you trade above 25,103, we're going to be bullish and we can target these upside targets. The market is now, well, this is yesterday. So you see how we had that bullish break up, and then the market corrected and almost got us stopped out, but now we're heading to the upside. And I think here going forward, I think this market may go down a little bit, potentially to the prior July high or to the July high, but then eventually propel itself up to the February 27th high and February 2nd high. So I think we have more to the upside, and it looks really similar to the S&P, which we also discussed in this webinar. So this is the S&P, a short-term one. Let me see if I can have another one. Yes, this is from July 9th. Risk appetite is back, break to June high, my trigger push to 2018 high. So this is the S&P. I said a break to the June high can take you up to the 2018 high. And if you look at the S&P today, this is the initial June push, and we moved up, and look where the market is now. Is it easy to trade? No, not at all. It's important really that we are sort of, as I talked about this in the past as well, we need to take care of the account, which is like mental, or like which is normal drawdown, and then we have a drawdown and mental as well. Like we need to be, you know, in a mood and happy and sort of ready to trade, to be focused. And in my case, I bought here the first time, and then I actually reduced my stop loss to entry. I got stopped out here at break even, and then I bought again somewhere up here, almost got stopped out, and then I moved up a little bit and I booked some profits pretty much up here. And since then I took a step back because with the non-farm payrolls coming out, I didn't want to hold on to this position for too long, so I didn't actually fully take advantage of this, and sometimes it is like this. Thankfully though, I'm having a break, and next week I'm going to be off for a whole week, so there's not going to be any webinars. Going to be spending some time at the pool and hopefully recharge my batteries and come back stronger to be able to withstand these sort of moves, because sometimes it's just like that, you just, you know, get out too early. Anyhow, what I wanted to tell you guys is also with this is that the DAX, yeah, it's great, a lot of people like it, but trade the S&P or the Dow Jones or even the Nasdaq. I think that's where the action is if you want to get involved in the stock markets today. Okay, let's see here. Maurizio is with us today. Thank you so much for joining us. I hope things are great in Italy. Anybody else that is watching, don't forget to hit the like button. I do think we're gonna have more people watching the recording today than watching the live. So if you're watching right now, don't forget to click on this button, and you can do that afterwards as well when you look at the recording. Maurizio, if you have any question, just let me know. Otherwise, we're gonna wrap things up, and we're going to be back tomorrow at 9 a.m. London time. As well, don't forget we have a new guy. His name is Harris, and he has been trading, I think it's from 2008. So he's been trading for about 10 years now, and very, very good analyst and writer. He joined us literally 2 weeks ago, and he's working alongside with Nathan and myself, producing updates and articles here. As well, myself, I publish a bit of content here, so you want to check that out. You can go back a few days by just clicking here, or alternatively, if you're looking for a specific market, then you can look here. However though, most of the stuff we publish is on the technical analysis, and sometimes the synchronization between technical analysis and news is not optimal. So for example, if you're trading, British pound, you should technically be able to click here and read anything you would like to read about this. Down here, you see as well these codes, so you can usually click on them. So if you're interested in pound Aussie, for example, you get the pound Aussie tag, and here you'll see different setups. So he's talking about head and shoulders in the pound Aussie. Yuri here is talking as well. He's talked about the break to the June low, July low, taking it down. This was 176.69, and yeah, it's quite great. And see here how actually it's interesting how Yuri already in July highlighted the move to the downside, and here as well, followed up by Harris yesterday. This is an old chart that I published some time ago. So yeah, check it out. Okay, do we have any questions? If we don't, then let's wrap things up. Cheers. Thank you, Maurizio. Thanks so much for joining. And thank you everybody else that is watching. Thank you.